So this session is really about, let's say, the disparity that happened in the early times with the big explosion of interest in cryptocurrencies and how that growth sort of outpaced knowledge of what was going on in that market. So we're lucky to be joined by one of the few people that actually brings a lot of clarity to that market with his data work. And then we're also going to be doing a bit of blue sky. So what does this all mean? Where is this market headed? I want to try and paint a picture of the real things that are in play, the real changes that can happen from this technology. And of course, we will have time for questions, so I hope you have some great ones for us, particularly for Willy, because this is a great mind that you have in front of you and someone who really gets this stuff. So to start, one of the neat things that happened in this industry is it kind of leveled the playing field and created an opportunity for new people to make their name. One of the downsides is in this disparity between knowledge outpacing excitement and fervor and hype was that you certainly did have an opportunity for scammers, people basically just lying and trying to get a buck. But you also had an opportunity where a fellow like Willy Woo, an Indonesian kite surfer, can come to Wall Street and give one of the most important talks to Wall Street at the height of all this bubble about some of this, everything that was going on. Now, I first learned about Willy in a way that I thought was almost luck on his part. So I look at all the data at Coindesk. I look at how people are measuring these markets, measuring these networks. And the first time I ever heard Willy Woo's name is he actually did a very simple plot of Google search interest and Bitcoin price. And the graphs lined up. And I said, wow, that's amazing. But I said, he happened upon that. The next time I heard about what Willy Woo did, it was something else entirely. He had come up with a completely new, very sophisticated way of measuring the Bitcoin market. And that set a whole range of things into motion. So I'd like to start really with a discussion about that part, Willy. What was it like to at once inform an entire industry with cutting-edge data science metrics and to be a guy that no one on Wall Street had ever heard of before?
Does this work? Okay, hi guys. I'm from New Zealand, by the way, and I'm not from Indonesia, but...
You live in Indonesia now, though.
I do. I live in Bali. My background is I'm an engineer by training, and I designed medical equipment and then went into technology startups. And it was a bit of a downtime for me. It was between projects, and I was just curious about this industry, and I myself just wanted to figure out how to invest my money. So I ran experiments, and I thought it was pretty straightforward. But the thing I did was I published it. I blogged it, and I didn't know if it was any good. When you put stuff out there, you have no idea whether it's good or not. And I guess it was interesting. When you come from outside the industry and you don't know... Well, let's say outside of the finance industry, you can make things up as a technologist and try and take a view on it. And a lot of the things within cryptocurrency, it is a new technology, and you can apply a lot of creative thinking to it. And I think what the world liked is the creativity in looking into these markets. I can't even remember what I did there, Nolan. But yeah, so that was interesting to see that you could come out of nowhere, publish something, and bang, everyone's sharing it.
But it was also a little more meaningful than just come out of nowhere. I mean, that in itself is important, but it's also a major shift in, let's say, assessment of value culture. Wall Street was really built off of information asymmetry. We can't name the best public analysts in Wall Street because no one shares their information. It's proprietary. It's not shared liberally. What you did was completely turn that on its head. You made your findings public to everyone. And that's a much more important change in a lot of ways. Do you see that as something that is, let's say, definitive of the crypto industry and is a mark of a much larger cultural change?
Yeah, I really love this aspect because I've been working with some other people recently and publishing, new price models, this sort of stuff. And we have a group, and in this group is, I guess, 70 analysts. Yes, at least half of them come from Wall Street, and they've moved now into the crypto industry because it's the new hot thing, and it's challenging people's minds on how do we understand this market. And this guy piped up and said, wow, this is what I love about this industry, because the research we're doing previously was behind closed doors, like you're saying, Nolan. It was hidden amongst hedge funds to get that one leg up so they could make more money. And here we were doing good quality research and then sharing it with the world. And there's an incentive behind that for us, because you kind of feel like there's a lot of smart people in here, in this industry, and someone's going to discover this sooner or later. And if you're the first to discover it, you do personally want the merit from it, so you publish it. And then it's an open source meritocracy, I think, is what we're playing into here. And I like it because this is a new kind of finance, and the interesting thing about cryptocurrency is that the people who are in Wall Street, the old money, the quant funds, the large hedge funds, they were not allowed, the institutional money they were delayed in coming in. The infrastructure for the large funds to come in now is only now being built, and they're under compliance. But the retail money, all of us ordinary people, could come in before them. And typically, it's the other way around. They make all the money first, and then we come in and buy in the public markets after they've made their, 1,000x. And now we're seeing ordinary people could come in and believe in this stuff, make their own decision before the very rich can. And to me, this is like a financial revolution. And I think it's it matches, with the meritocracy around this, that you can do top grade research and then put it out in the world and then let the public have that information, not necessarily the hedge funds.
And I think that a lot of that culture really did come from the laws that were originally put on Wall Street in the 1930s. And I know a lot of people often compare cryptocurrencies to the early internet. It's like the 1990s. But for me, when I see the money side of it, it reminds me more of the 1920s in America, where those retail investors were first in. They were the first people to start to understand what was going on. And even previous to that, the Industrial Revolution, we saw, of course, a lot of just normal people being able to invest in normal things and make a return. Would you say it is a little more like that time of the early stock market versus the 1990s when the internet was financed?
Well, I wasn't around back then, but what I gather, I read a book called, it's kind of a required reading for anyone going into Wall Street, Reminiscences of a Stock Operator. And I'm reading this book, and it was around this times and the lessons learned, and I'm going, oh my gosh. Everything we have new here, we think it's all new, was happening back in the 20s. The way people were gaming things, how scammy the markets can be, how you can manipulate the markets to make money. This sort of the stuff was happening back then. It was just history repeating itself. And so I believe it's very similar. It's onto something, The public markets had a lot of value to give, but with that was a lot of negativity around, scamminess that could open up behind it. And we see this in cryptocurrency today. But I also think this is a double-edged sword. Your immediate reaction would be, let's regulate. Let's do what we did before. Let's bring the SEC in. Let's level the playing ground. Let's protect the consumers from being scammed. But for me, I was in Canary Islands. I had a nice little place by the beach, and it was just my downtime. Surf a bit. I had my computer there trying to pull in data and understand the markets, and I was learning to trade at the time as well. And I was trading this particular market. It was Matecoin, by the way. This market traded 150 bitcoins per day. It's $75,000. And if you were trading this long enough, you realize, hold on a minute, there's actually, you think this is a market, but there's only 5 people or so around this table. There's a sea of traders. There's only 5 people, really. I'm guessing. There's only a few people controlling this market if you learn to trade this long enough. And if you had enough volume, and like for me, I had enough to be about 10% of the daily traded volume. And I was like, wow, I can push the price around. And then this is like sort of this market which was this size, and you go all the way down to tiny little markets where someone who's 13-year-old trading from their bedroom could learn the same lessons that a fund manager swinging maybe a few $100 million to push the markets around. And I realized it's unregulated, yes. So all this sort of crappiness in the markets where the market's being manipulated, now a 13-year-old can experientially experience this stuff from their bedroom with their own pocket money. And I'm interested to see what kind of financial intelligence arises from that when the kids these days who are so crazy about cryptocurrency are learning the ins and outs of how the markets work. Like for me, when I analyze Bitcoin now, I can see the manipulation going on the price. And that stuff started to happen in the last 2 years. And it's starting to look like Forex markets. And I'm going, there's stuff happening in the very large markets, which I'm sure there's very, very large funds out there controlling most markets. And you don't, this is not the stuff that we learn about listening to the news or reading financial, or going into financial school. This is an experiential way of learning financial markets, and I think that bit is great.
Especially because there is no one definitive place you can go for this data. We're still in an environment where we're having to string it all together using multiple data sources. The data sources that are out there haven't really coalesced onto one platform yet. There's a few attempts. Some people are starting to put it together. And that's, I guess, where we're going to start to see cryptoeconomics really become measured. But we can see from these disparate data sources that there's a lot of legwork to do, and there are armies of people like you doing that legwork. So I wonder, where do you go right now to get your data, and how do you put these things together?
Well, yeah, it's who was the chairman of the New York Stock Exchange in the last conference?
Jeffrey Sprecher.
I was like, what do you do? I do data, and that's what we do as a business. Data is so important. He asked me the same question, where do you get your data, right? And the answer was, for me, wherever I can get it. And inevitably, it's live on the web, and some of the best stuff there is other people writing their software and their code and giving it out for free, like me. The likes of Nick Carter and the work he does with Coinmetrics. Even like CoinMarketCap, very popular site where we're tracking, maybe 1,500 coins. Because it's on the internet and there's a page for it, there might not be a data source you can hit by signing up and paying for anything. I think they're building that now. But the fact that you can see it on your web page means the data is being visualized and it's coming through, so you can hit the same endpoints, the same access to the data that the web page is rendering. So you can do all this sort of hacky stuff, and you pull in the data. And all of it's just people grabbing it where they can.
But the blockchains themselves also offer new tools and insight and visibility to this data that wasn't previously available.
Yeah.
So we can actually start now, and tell me if I'm wrong, start testing a lot of economic theories because of the type of data that comes from this technology.
Yeah, this is the groundbreaking part of cryptocurrencies, crypto assets. We have never seen in the history of the world before an entire economic system that is more or less completely visible. So some of the work I do is I model the price of Bitcoin. I also predict the price of where it's going. And you think, the traditional traders go, yeah, you think the price is going to go up or down in 6 weeks' time. You're just making this crap up, right? How can you predict what human psychology is going to do? No one knows. But the blockchain knows. You think about it, these are flows of capital. And before the capital hits the exchanges where everyone exchanges, that flows on the blockchain. So we can see all the movements of value moving between investors. And we've never seen this before. Like, for example, a very simple example is if you remember, I don't know, high school economics, we have the simple equation which is, if you guys remember, there's like, this is how much money there is, the money supply. This is V. V is how much it circulates. And over here is GDP. Makes sense that all the goods and services that you pay for in an economy has to be our money supply multiplied by how quickly it churns over, right? This is like a hack. This is an example. It's like, how quickly it churns over has got to be whatever the goods and services we have, which we can figure out through, your tax filings of companies, and we kind of know how much money the banks have printed, and then this is how much money circulates. This is kind of bullshit, right? It's like, if I give you $1,000, Nolan, because I want to buy your gold coin, that's not GDP, but money flowed. And we could never track that as an economist. Now, on a blockchain, that happened. And I can see every single transaction, every single investment. I like the equations on blockchains is the flow of investment. And we've never had that before. So right now we've got the Austrian School of Economics, you've got the Keynesian, and you've kind of all theory. But now we can have data. We have data scientists going, look, there was investment happening here, and it led to this outcome. And there's no theory in it, it's data. We can show that repeatedly that this works, or it doesn't work. And that's, I think, a really innovative part of blockchains.
And there's other parts of value in an economic system that we're starting to see in other data sources, right? Investing, and I guess that's where cryptoeconomics really starts to become a real thing. It's not just investing your time. We're able to start to see on a blockchain and different data sources where people are investing time. Sorry, you can only invest money, but we're seeing where people are investing time, which is also an important contribution, right?
This is fantastic. So you've got the blockchain, and this is flows of capital, and this is trusted information. You know all about this. But we're in the age of open web, an age of open source, and all of the time people spend on building this infrastructure is out there sitting on GitHub. And we can measure it, and we can pull in all sorts of data. You go, all right, this is Bitcoin, this is Ethereum, this is whatever coin. And they all have a repository of code. And let's look at how hard these guys are working. Are they building code that is regular? Are they innovating? Are people taking their work and forking it and using that code in other projects? Who's writing it? Is it just one person? Is it two people? Or is it 1,000 people that are contributing? How decentralized is the contribution? Can we track whether the contribution base is getting wider and there's more people? How controlled is it? All of this stuff is on the open internet now, and it just turns out that this stuff predicts price. It predicts price, long term. Longer term than capital
Which is,
movements.
I guess, the beginning of measuring cryptoeconomics. What we're seeing at Coindesk is a real sort of settling on what cryptoeconomics are. And of course, you'll hear people say, oh, it's just a made-up word to sound fancy and sophisticated. I say it's absolutely not that. It is clearly just economics like we all know. It's just a subcategory of engineering, a subcategory of building networks where we take people's investments of time that they are investing into growing these projects in order to build them. And we're using all of these different investments of time and energy and effort and seeing what comes of that. Would that be the way you would look at it as well?
Yeah, ultimately, all markets is down to people. Yeah, we can see where the energy is going of people, the time, but it's not just time, it's the ingenuity. Like I can track, someone might have spent a very little amount of time on a genius idea, and you can see how that propagates because that bit of code went everywhere, or that idea got borrowed between projects. And this used to be all behind closed doors in a company. Trade secrets. You know, only the analysts could go in there and see behind the closed doors. Now we, the public, can see all of how the sausage is being made out there.
Well, particularly with Bitcoin started that, and Satoshi started all of that. Bitcoin, nothing within Bitcoin was new. It was the orchestration and arrangement was new. I often use the bicycle as an analogy where, you know, they knew what gears were, they knew what wheels were. What made a bicycle magic was the combination of those technologies, and then all of a sudden it was magic. It would go on two wheels, and that no one knew was even possible before. And then once the idea was out of the bag, everyone could copy it. And of course, that's what we see with this ingenious arrangement of technology that Satoshi offered everyone freely. We don't even know how much time he spent on it, but clearly it was the right calibration.
Yes, it was. It definitely was. All the parts were there, but Satoshi made it work, and we never made it work before then. But you know, going back to the idea around time, it just reminds me when you look at financial markets, when you look at a price chart. I mean, who here has traded stocks or traded the markets? You realize there's only three variables in it. There's price, which you see. Price is going up and down, but it's going up and down over time. And the last thing is you got the volume traded. And all financial markets are those three variables. If you're trading Forex, you don't even have much volume. That doesn't tell you much. So now we're moving to this era where you have those three. You've got blockchain capital movements. You've got GitHub commit code base. You've got social media. You've got search trends. You've got the entire digital economy telling you what's happened. And we're only beginning to understand how this comes together and how you can build a model around it. It's very exciting times.
And in some ways, you can even tell the history of cryptocurrency and the different market cycles that we've seen based on the types of data that have been produced by each market cycle. So I would say 2013, the big data winners were Coindesk, because we invented the first globally indexed price that showed there was a global market for Bitcoin and really stopped some of the arbitrage. And you had blockchain.info, which was really the big network performance metrics and created the standard for network performance. When you see what happened with the market after, when it was really a bear market for 2 years, you saw a lot of copycats. And then, of course, CoinMarketCap in 2017 was the first to say, actually, exchange flows and everything that's happening in all these markets is really, really important. Are you able to see that sort of trend in history, that you can start to understand the maturity of the crypto market based on the different data sources that are coming that help define each of these market cycles?
I guess so.
So I would say, like today, we're talking about, a lot of people felt in 2017 that it was all price and exchange activity, caused a lot of froth, caused a lot of hype. And you're seeing a premium in the bear market on the GitHub type analytics that you're talking about now, which were really about seeing if people delivered on the promises they made and the investment dollars they collected in 2017.
Yeah, we're definitely getting more sophisticated. Like when you've got nothing, you've just got price, and you don't know how to understand it. And there's like multiple price feeds. What's the first thing is you composite it so that you have one price that everyone can try and analyze rather than 10 price feeds. And then as the market gets more complex, obviously there's going to be more metrics to try and measure it. The thing for me is that we are still in the early stages. There's so much information being thrown off. There's so much, we've got price indexing, we've got now, CoinGecko did some work around the GitHub developer activities. You got CoinMarketCap indexing 1,500 coins now, and so explosion, the markets that they trade on. There's, and also coin supply, all these things are now available, these multi-dimensions of it, yet it's nowhere near mature. I do not have the Google for it. How am I going to search and make sense out of that information? I feel like when we get to the point where we can search that information in an intelligent way, where if you're an investor, I'm looking for this, boom, it comes up.
So would you say that it's simply a question of seeing these networks themselves becoming more mature and people judging the growth and cryptoeconomic forces at work growing these networks that will allow us to get to the point where we can see that? Is it really just a question of these markets becoming more mature?
Yeah, I think it's in tandem. As the markets become more sophisticated and mature, they throw off more data. And then as we learn how to work with that data, the tools get more complex. They get more complex and simple, if you get my meaning. The complexity is rising while we learn how to make sense of it. And so for the user, it becomes simpler. And this mirrors what we're seeing in blockchains. Like anyone using Bitcoin back in 2011, it was like the early days of computing. You had to be a genius, you had to really get into the nitty-gritty, and now it's on your mobile. And so this trend within crypto is happening, how to use it. The market's getting more sophisticated, and so are the tools for us as investors.
And I guess, would that be the reason why there's so much attention on some of those GitHub, especially from sophisticated data analysts like yourself, there's so much attention on GitHub activity because we can actually see there's a much more mainstream adoption on the developer side, perhaps not yet on the consumer side. That's, well, not perhaps, for sure, not really mainstream adoption. But on the developer side, there seems to be that. So you're actually, as an analyst, getting a kind of level playing field and able to see where activity and attention is going within GitHub analysis.
Yeah, I don't understand that question, sorry.
So would you say that you're able to get more sophisticated data, insights from looking at GitHub now that are more accurate than you would, let's say, looking at network performance?
I think they're all very different things, but definitely as GitHub becomes much more mainstream, obviously you're going to get more accurate and more nuanced signaling. What's happening right now, and let's talk about this, what's happening right now is a change of eras. We had an industrial age, and we're now moving into the post-industrial digital internet age. And so everything we've seen, industrialization in a corporation, mass production line sense, the equivalent is moving on to the digital domain. And so, if we take this in the GitHub sense, in the industrial age, you needed to read and write, right? And be able to communicate to people. In the digital age, reading and writing means you need to be able to read data or code or write code. Like you think of industrial age, as computers came along, what was really useful was our tools went from pens and paper, and then to be really useful, you needed to use a spreadsheet, do a few models. Now, as we get sophisticated, you kind of need to deal with much broader sets of data. You need more automation. So if you were to go into any job today, to be really useful, if you can write code, you can get 10 times more work done because the automation is there. So there's this literacy trend that the young generation now they are learning code, and that's reading and writing, that's all landing on GitHub. And that means that we can all see it and we can analyze it. But by the way, that trend is also the trend of finance. We've had This is, you can look at the macro markets of this world as just buckets. They're just buckets. They're buckets where we park money into it. Why is a building worth $5 million is not because it's worth $5 million. The bricks and mortar don't mean it's worth that. They may say the land's worth that. The reality is someone decided it's worth $5 million and they're parking their value in it. So it turns out real estate is $280 trillion. Cash and fiat money is about $90 trillion. All the public markets and the equities, the Apples, the Googles, the Amazons, the GMs, Teslas of this world, all put together is $80 trillion. Gold is $8 trillion. They're worth this because people park money in these buckets. And then, if you're a George Soros, I don't know, like a large fund, you're just trying to move your value between these buckets through the economic cycle. And we're in a post-industrial, digital, web-governed age. And someone 10 years ago figured out how to make a digital internet-native scarcity. So the first time in history, we've got something that can't be duplicated that lives on the internet. And because of that, we can store value in it. And that value is currently sitting under $50 billion. It's 1,000 times less than the macro store of value buckets. And so this is the transition we're going through, where finance was in all these very solid things, houses, companies, gold, and it's getting digitized. And we've got whole empires of companies in the digital space. Airbnb does more volume than the Hilton hotel chain as of so many years ago. And now we've got an internet-native digital currency and a store of value, and we can transact that. This is why Ethereum is being very, very hyped up, and we're interested because now you can with this technology, you can transplant all the smart contracts of Wall Street onto the internet. And so it's an exciting time. We don't know what's going to win. We don't know what's going to happen because we're still learning.
And we've only really seen, other than Bitcoin's inherent qualities, we've only really seen one smart contract scale, which was the ICO
The
ERC-20 contract, right?
Yes.
But nevertheless, the world heard the news that early stage finance had been completely revolutionized. We saw an incredible shrinking of the distance between idea and financing for a little while. Certainly rent seekers came in and all kinds of terrible things happened. But for a little period there, ideas were getting to market much, much quicker.
Yeah, this is... Yeah, it was a cycle we had to go through, and I still meet a lot of people who think the ICO way of raising money is great. I don't believe that to be so, but yeah,
It was something that definitely showed that the world was changing.
It was.
Yeah. So we would love to take a few questions. Let me see the slide here. Where is a good place to get short-term trading signals for Bitcoin?
Okay, so the truth of markets. If you're going to be a trader, I recommend there's like I say, if you're going to be a trader, bear in mind, 90% of traders lose money. 10% of traders make it. A zero-sum game. Why should you trade? You should trade because you can learn about financial markets, and those lessons become very, very valuable because the whole world runs on markets. We're buying a house, whether you're traveling, and there's Forex. If you know markets, then it gives you an advantage in life. So first thing is, your goal when you're trading is to learn as many lessons as you can for the amount of money you're going to lose. The question of where can I get the best trading signals for Bitcoin? If I'm reading that literally, like I should buy here, sell there, you're going to lose money. It doesn't work like that. If that's the people who make money in these markets they have their own systems, they stick to it, they have insights, and they don't let that out because then everyone else will trade on it and you lose your advantage. And on top of that, remember, they make money because they've got, they've got more ammo in markets. It's not like we're sitting and looking at the market and I'm buying, it's going to go up, down. The reality of markets is it's a gridiron game. And there's players on the market that's going one way or the other. You're pushing for yards either way, and then there's the audience. Most traders are in the audience going, I go this, I'm going to go that way. Traders, they have ammo, and they push the price around how they want because they've got the financial power to push past people selling and then force them to retrench. It's a game out there. It's a strategic game.
And how would you piece that together from data sources? Are there ways to go into data around crypto to start seeing how that's happening and to really show that these things are being pushed?
Yeah, there are. I mean, some of my work right now is deconstructing the manipulation. So it's very visible in some ways. Some of it's hidden. So yeah, like. It's like Wall Street, the quant funds. They play a game. They use very sophisticated computers to figure out how to push the price around.
And because they're armed up, they can push.
Yeah, and if you think you're going to trade and beat them, and I'm going to find a signal that's going to tell me, public on the internet, if you make money, it's because you're lucky. So I don't want to put you off trading. I think you should trade to learn about the markets. But yeah, bear in mind, Bitcoin is the major leagues of trading. Go find a crappy little market that is much more amateur. If you want to trade the Bitcoin market, it's 24/7. It's unforgiving. There are some now very large hands in that market manipulating the price, and they're out there to get you. Yeah.
Scary stuff.
Yeah.
So the next one, where do you see crypto in 5 years?
Gosh, that's like saying, where's the technology? What's coming out of Silicon Valley in the next 5 years?
Well, you could also say, where are we?
Oh, okay. All right. Here we go. We are 1% of the world using or owning cryptocurrency. Cryptocurrency has its own Moore's law. It doubles every 12 months, roughly, 12 months, few days. On the long run, the amount of people going into cryptocurrency doubles. So if you were to run this 1%, doubling each year, roughly 9 years or so, less than a decade, and half the world will be using cryptocurrency. So there's an adoption S-curve on this maybe not technology, but people putting their funds in. So this is the inflation of this little thimble of $60 billion that's going to inflate to the multi-trillion that is now a major macro asset that is an option between gold or real estate or whatever. And so that's what we're doing here. Yes, there is technology, but it's also a financial market and it's inflating. So on that stage, in 5 years we'll had our next run up and we'll be over $1 trillion in capitalization. It means that Bitcoin is no longer, and crypto assets is no longer a swear word between people who wear suits and ties. You will see large hedge funds and institutional money in it. The vocabulary around the news around crypto assets will be not about drug money or money laundering, because respectable institutions are now in it. As far as the technology, I can't answer that. The technology is disruptive, it's unpredictable, but it's going to, we're going to see a lot of things explode.
And there is, I guess, a separate element. Because we are dealing with cryptography, it's not the same pattern that we saw with video games or Silicon Valley. It's not fail fast and break things and push, and every year there's going to be a new video game generation coming out. We're dealing with cryptography, which requires a certain track record and a certain prudence of development.
Yeah, it's quite different from the Silicon Valley fast pace. It's there, but it's different. You know, your blockchains are storing billions, sometimes, you know, tens of billions of dollars. So if you make a mistake and have a bug, that's the money at stake. So it's, you know, the world's biggest bug bounty. And there's a thing called Lindy effect. Lindy effect is that if something has a history that people are parking their money in, it's more likely that it's going to last longer than the other thing, you know. So Bitcoin has almost a 10-year Lindy effect. It's 10 years. It's January of this year. That was the 10-year anniversary. And so you don't want to break that. You don't want to move fast and break things. In this genre of Bitcoin is a reliable store of value. It's our digital gold. And then you've got things like Ethereum, which is move fast and break things. And it's all very controversial whether or not you want to push technology that quickly. Because remember, at the end of the day, you're building a platform that governs value transfer and trust. So you've got to mute the innovation, or at least you need to firewall or sandbox the innovation. If this fails, it fails and does not blow up this other, you know, this other area. So yeah, it's more complicated than just a startup trying something and failing, and start trying a new thing. Imagine if we have the world economy dependent on this stuff. Like, say Bitcoin sitting there at $10 trillion, it's backing a whole lot of value transfer. Maybe it's
the rebuild of Venezuela.
Yeah, maybe the Reserve Bank of the US has X% reserves in gold and X% reserves in Bitcoin, digital assets, and suddenly Adam Back sitting there doesn't do his code review correct, and Bitcoin breaks, and suddenly we have 42 million coins instead of 21 million. What happens to the world global economy? Because that gets out in the wild. And so we have to be very careful. The older this technology becomes and the more that the world depends on it.
At least we have an analogy, because when they doubled the money supply or created $10 trillion 10 years ago, we know where it went. Brooklyn real estate, San Francisco real estate. So there is some historical precedent there. So we'll be okay, I guess, unless you want to buy a house in Brooklyn. If someone wants to do a deep dive into data like you have, where's the right place to start learning?
Gosh, I don't think I've met anyone who's been in this space and truly doing unique, amazing work. I haven't met anyone who, none of them read about this. They've been able to tap into their creativity. The stuff is very new. So I think it's a little bit like, take the mindset of a startup founder doing something truly disruptive. You want to go, okay, this is new territory. How am I going to tackle it? There's no playbook.
But I'd also direct them to Wooble.
Yeah, you can read. You can go to my site and read. My site is just the learning journey I took. Here's a discovery, here's a discovery. And, you know, I find that, you know, as a startup founder, that it's very hard to learn about how to found a company. And I find the best things to learn about how to be innovative and think creatively is biographies, listen to podcasts and of the greats and the trouble they had or how they solved this problem. So if you read the blogs of other people doing this work, you can see their thought process, and that's probably the thing to get into, is to figure out the thought processes they're using, and maybe that's something useful to your toolkit.
And I'd also direct you all to the Cryptoeconomics Explorer, which we built at Coindesk. Still a beta product, still missing a lot of data sources, but we tried to create a visualization that would help everyone get a visual sense of the size of each of these networks. So come check it out at coindesk.com. What would it take to bring blockchain technology into the mainstream?
Time.
Time.
That's it. This stuff is going to happen. It's happening. I don't think anything can stop it. It's just, this stuff doesn't happen in an instant. You know, it's there's the technology has to be mature. We've got to layer that up. Look at the internet today. It's layer upon layer upon layer that got built. You know, when the World Wide Web came into the world in the 80s, I think, but then it became much more public in the 90s. To get to where we are, we needed the iPhone, mobile, right? We needed fiber, we needed Wi-Fi, we needed 4G, it's all this sort of stuff. So that just takes time, and it also takes time on the financial sense for that inflation of value coming into this bucket that's a thimble right now. It needs to be large enough so that it's useful.
The internet, like cryptocurrencies, was illegal to use for many, many years.
A lot of parallels.
A lot of parallels.
Yeah.
And you can even see a lot of that, let's say, trend where, you know, there was a time in World War II, especially after World War II, where cryptography, you know, before World War II, during World War II, and for the years after World War II, cryptography was only used really for war. It was a state actor that used it and nobody else. And then we started to develop these technologies because we knew something like the internet was coming in the 1970s, and they developed the first ever private sector innovation in cryptography in hundreds of years. But then it was only used by corporates. They traded your personal information for them to do the cryptography for you. You didn't actually hold it in your hand. And now with Bitcoin, we've had the full power of mathematics and cryptography put into the individual's hand. So are we dealing in a situation where it's just a matter of time before people understand the power that they have been given, and that will help propel this thing forward?
I hope so. What I've seen is people who get into this, there's that rabbit hole of cryptocurrency, the rabbit hole of Bitcoin. And if you start to go down that rabbit hole, there's an education in sovereignty, an education of how important it is to have the individual power. You know, this country was built on, you know, you look at the laws, the freedom of speech, the freedom to wield arms, and this is an interesting topic. You talk about cryptography, and it was a technology of war, but I would say it still is. If it's in the corporate realm, it's, you know, to protect against corporate espionage, or it's business, war between business. And in this day and age, what's really powerful in this world is not necessarily who has the biggest nukes, the biggest war machine. It has who has the most financial might. When you think about war, it is usually, the reason is someone wants to expand their resource grab. That's a resource grab. No matter what ideology's behind it that's being sold, it's a resource grab. And right now, the most powerful weapon in the world is economic. And so I surmise that the right to bear arms in America is also a right to bear cryptocurrency, because there's a war out there grabbing resources from individuals, from other countries. And so this is in that context. Cryptography is still a technology of war.
And in fact, just so the audience is aware, after World War II, cryptography was actually deemed in American laws as a munition, as a weapon. It was counted as that by law, and took many, many years for cryptography to actually become a commercial product. Before that, it was absolutely counted as a munition in a war. And if you traded cryptographic information or knowledge, you were in, against all these laws, and you could go to jail. In fact, there was no university courses about this stuff. There were no textbooks. It was all run internally and was not for the public whatsoever. So an amazing change. And I also think you could I 100% agree that you can support, if anyone ever tried to shut Bitcoin down from a legal sense, I do believe you could use the Second Amendment as protection. I do believe you can use the First Amendment as a protection for cryptocurrency in America. And basically that makes it, legally anyway, bulletproof in America, as far as I can tell.
I'd love to see that tested. I really would. I would really love to see a lot tested against the Constitution right now. And
because inevitably, the power of using math to express consent in the digital world is a human right.
I agree. I agree. Yeah. See, this is the rabbit hole of crypto assets and Bitcoin. You think about bigger picture stuff.
So this is more on the price. Has anyone demonstrably outperformed the simple price growth of Bitcoin with an investment strategy?
Has anyone demonstrably outperformed the simple price? Yes, most definitely yes.
Especially through using stable coins and hopping in and hopping out of the markets and...
Yeah, see, Bitcoin is the granddaddy, and it is that 1% adoption going to the 100% S-curve. It's exponential. But it just turns out that we've got, last cycle, 1,500 coins that trade against Bitcoin, and they go up and down against Bitcoin. So never mind if these assets are crappy or they're not, and they're interesting experiments. The fact that they go up against Bitcoins, you've got a rocket going to the moon, and then you've got a launch pad on that rocket to launch off that. Sure, you can demonstrably outperform Bitcoin. And you see you've seen the Lambos around? These guys are not necessarily trading Bitcoin. They're trading crappy and not so crappy experiments. The reality is they're timing it. They're taking huge risks. They're being able to stomach losing everything for that pot of gold. Yeah.
And plus, I would say that you've got, it's sort of counterintuitive. Whenever I go on some of the mainstream news, they always expect, they'll ask me onto the mainstream news if the price is up or the price is down or there was a hack or one of these storylines. And they're always surprised when the price is down, and I say, well, actually, a lot of people in crypto are pretty happy today. It means Bitcoin's on sale. And I think that's something that a lot of people haven't got their minds around, that especially like taking that question into account. Outperforming the market for these people just means acquiring more Bitcoin.
Yeah, what is it? Fund manager talking about his clients, and the most sophisticated investors get excited when the markets are down because they can buy more at cheaper prices if they know what they're buying. Yeah. And we put too much emphasis on price, by the way. We should just, look, you don't have to be a trader. You don't have to be, it's inevitable once you're in, you're glued to the screen. But you can almost measure your maturity as an investor by how often you check the price. The reality of Bitcoin is if you were to chart its returns, adjusted for its risk, and you compare it against stocks, real estate, bonds, emerging currencies, Bitcoin is here, US stocks is here, and that beats everything else, gold, real estate, all this, over the long term. And Bitcoin currently tends to cycle every 4 years. Well, they're getting longer, but the 4-year cycle is, so you want to hold for over one cycle. If you do that, taking into account all the ups and downs, just put in a drawer, forget about it, come back in 4 years, you'll beat stocks by a long shot. And so that's the mindset you want to think about. Think about the long term. If you go and trade, the whole thing about hodl, hold your coins, right? Don't get involved in trading because you're going to get scammed out of them. Well, it's not a scam, it's a zero-sum game, and there's going to be a better player out there than you. So trade it to learn, but hold your coins and ride the adoption. It's like investing in the internet before it became everywhere.
So I do want to ask, let's say, a question about the hype, or let's say a negative question, because we've got one here. Not negative, but questioning the whole momentum. Blockchain seems to be a solution in search of a problem. What do you think are the best use cases today, and what are the solutions already performing well?
Yeah, I think it's a good question. It's at the end of the day, the blockchain's a ledger, and I don't necessarily agree it's searching for a solution. It is a solution right now. It's a digital store of value. That's a thing that's 10 years old, and it's something that went from a market cap of 0 to $60 billion. And you know that the total fees to process this network in its first year came to less than a penny. That's how tiny that market was. Today, I think it's about $300 million, $400 million, maybe $500 million of fees.
That can be thought of as revenue.
This is fees. This is what the miners are charged. It's not what they're mining. It's what they're charging the network to process transactions. So in 10 years, it went from annual earnings of the network from less than a penny to now, I think last year it was close on $1 billion. So that's the growth trajectory, and that's not searching for a solution. It is a solution. But we're talking about other uses of blockchain, and a lot of people are experimenting, creating these applications that are decentralized with no center. And I think that I have friends that are in enterprise. They worked in very large enterprises, and they're in blockchain now, in crypto. And I think these are the people that understand enterprise the best. They come out of enterprise and they understand the technology. And what they are saying is this ledger, you can prove its authenticity. And in enterprise, there's key metrics that you need to be 100% sure they happened. If you get that wrong, then your business is, like, for example, business accounts of your customers, things that the bottom line of your company depend upon. There are, inside every company that's of scale, you need to be able to store that data and make sure it's correct and no one's messed with it and the models are right. And so if you can, with blockchains, you log the data. It's a data logging thing. As you log it and it goes into the blockchain 100% because it's been verified, it makes the system a lot cheaper and much cheaper and more reliable when it scales out. And it's very nuanced. You have to be an enterprise to understand the advantages. And we all know that these companies have archaic systems, as layer upon layer of crappy stuff to police the crappy stuff underneath it. You get this sort of debt, and that costs businesses, billions per year. So that stuff can be streamlined. I think that's the use case.
Terrific. Well, the monitor is telling me we're out of time, guys. So please give a nice, warm applause for Willy Woo.